Good afternoon. Welcome to GrainTV. My name's Cody Bills. This is Logan Burgess. Today is December 11th, the day of the USDA supply and demand report. And after the dust settled here, corn traded down 1 3/4 pennies, soybeans down 3 3/4, wheat leading to the downside down 27 1/4, and Kansas City wheat following right behind it down 22 1/4. Logan, what's the reason that wheat fell out of bed today?
Well, you know, they're in the report here this morning. Ending stocks for U.S. wheat was raised 50 million bushels. That was a result of export sales revised lower by 50 million bushels. Obviously, that set the bearish tone here early. I think another story that people are watching out of this morning's numbers was a 1 million metric ton increase to projected ending stocks out of Russia. I know, you know, a lot of people in the trade have been talking about it. These production issues out of the former Soviet Union, export sales issues out of the former Soviet Union have supported U.S. wheat prices here. I think that today that was a little bit of a confirmation that things there are better than expected. The U.S. is going to have to struggle to remain competitive on the global front, and as a result, we see Chicago wheat off 27 1/4.
Yeah, I think the fact that you see Ukraine and Russia have a little bit of wheat to export, I think that is what caused us to fall outside of this channel that we've been trading in for the last couple months here. We fell sharply out of it. It was trending lower all day long. We printed lows, we cupped over, we traded through them, we printed lows, we cupped over, we traded through them. I think tomorrow we're going to see a continuation of this. I think there's a good chance, however, we're going to find some buying support down around $8 and also down around this 200-day moving average. I think one of the things that we do need to pay attention to, and the reason I'm giving a lot of I guess I give a lot of credence to this 200-day moving average is if you look back over the price history, you can see it played a very important role here in acting as resistance back in 2011, again, right at this point here, and then and I think we're going to have a role reversal type situation here. There's a good chance we'll see some support. As for corn and soybeans, we really didn't see much for surprises out of that, and as a result, we really didn't trade too much of a range here, Logan. I mean, what are your interpretations here of the bean numbers?
Yeah, you know, on the bean numbers here, Cody, we did have a 10 million bushel decrease there, two ending stocks down to 130 million bushels. That was right in line with trade expectations. Not a lot changed here on the bean balance sheet. I know that a lot of people were expecting or maybe looking for an increase in export sales projections. We didn't see that today. That was left unchanged by the USDA. Where we got that reduction to ending stocks was an increase in 10 million bushels out of the crush number. So in line with expectations, but not really by way that people were maybe expecting. Certainly in the January report, there might be room for a revision higher there, given the exceptionally strong pace of export sales and given how many sales we booked already this marketing year as a percentage of of total projected sales.
Yeah, so taking a look at soybeans and knowing what we know after this report, do you think there's a chance we can break through $15, or do you think we've passed that opportunity?
You know, I think demand remains very strong in this market. I think that today's report was really confirmation that the long-term trend in beans that we were talking about is still intact here. We're going to be looking for that to be very supportive of this market, and demand remains strong, so I wouldn't be surprised if we drifted sideways, maybe higher here in the near term. But one thing that's over the horizon on this bean market that people need to keep an eye on is the South American crop. Today, the USDA did not revise their production estimates for Argentina or Brazil, still expecting 81 million metric tons of beans out of Brazil, 55 million metric tons of beans out of Argentina. Obviously, colossal numbers there, you know, and that will weigh on the market, but bottom line is right now demand remains strong, and it's still a long ways until those beans are out of the fields and into the market in general.
Yeah, short term we have strong demand, long term we have a huge supply coming onto the market. I think in the short term there's a good chance we could make it through that $15, but most likely we'll be trading somewhere in the range. I do not think we're going to necessarily take out the highs that we printed earlier on this year. You know, as for corn here, you know, for producers out there that are growing corn or have corn in the bins, do you think that this changed the way they should be marketing, or you know, what are your interpretations of corn price right now, and where do you think it could go?
Yeah, you know, Cody, right now a very quiet day in corn. It wasn't a huge mover. One area though on front month corn, I guess, is 708 price level is the low here. recently. That's going to be an important price level to watch there on this corn crop. And you know, the bottom line is, Cody, right now export sales remain extremely sluggish for corn. Ethanol production it is running at pace to meet USDA expectations, but last year we saw a substantial pickup in ethanol production during the months of January and into February. This year we don't know if we're going to see that, just given the ethanol crush margins. Last year sitting about $2.30 a bushel. This year only sitting about $1 a bushel. So at this point I wouldn't be opposed to maybe putting in some downside protection. I guess bottom line, with how tight stocks are though, I'd be leery of putting a top on this market. But certainly I think the potential is here if we don't see strong export sales, if we don't see ethanol production pick up the pace here over the next couple weeks, people are going to start looking for a revision lower in those demand side factors out of the January report. Certainly bearish for price action there.
Yeah, really what we're banking on at this point is some sort of weather market,
right.
Which, you know, betting on a weather market with your crop is not necessarily the most conservative play.
Right.
But thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call at 877-472-4607. Remember, you can take a demo of the FireTip trading platform, which we display here every day. You can chart these markets on your own. You can watch them trade live. You can take a demo at grainhedge.com. Remember, there is substantial risk in trading futures and options is not necessarily for every investor. So make sure you read the full risk disclosure. Thanks a lot. We'll see you on Wednesday.